Welcome to an in-depth analysis of a powerhouse in the healthcare solutions domain, Inventurus Knowledge Solutions, widely known as IKS Health. Established in 2006, IKS Health has spent nearly 2 decades positioning itself as a critical bridge between Indian clinical expertise and the complex needs of the United States healthcare market. With a workforce exceeding 14,000 employees, the company operates as a premier partner for physician groups and health systems, enabling them to navigate the administrative burdens that often detract from patient care. As we look at the Indian stock market performance, IKS stands out as a high-growth, tech-enabled service provider. It's not just a back-office operation, it's an integrated clinical support system that leverages advanced technology to optimize both financial and clinical outcomes. Today, we will explore why this company is a key interest for seasoned investors and entrepreneurs looking at the intersection of healthcare and technology.
The core of IKS Health's success lies in its comprehensive suite of services designed to tackle the administrative burnout prevalent in global healthcare. Their business model is divided into 3 primary pillars: revenue cycle management, clinical support, and technology-enabled services. By managing the end-to-end billing and coding processes, IKS ensures that providers achieve a 99% accuracy rate in claims, significantly reducing denials. Furthermore, their scribe services provide real-time clinical documentation support, allowing doctors to focus entirely on the patient while IKS professionals handle the electronic health record entries. This synergy of human expertise and proprietary technology creates a sticky ecosystem where clients rarely churn, leading to predictable and recurring revenue streams that are highly valued in the stock market.
Moving to the numbers that drive investor confidence, IKS Health has demonstrated robust financial health. Over the last few fiscal years, the company has maintained an impressive EBITDA margin, typically hovering between 25% and 30%, which is significantly higher than many traditional IT service firms. Their revenue growth has been consistent, fueled by long-term contracts with large U.S. healthcare entities. For the Indian investor, it is important to note the company's efficient capital allocation. With a return on equity that remains competitive, IKS has managed to fund its expansion largely through internal accruals and strategic debt. This financial stability provides a safety net against market volatility while offering the high growth potential associated with the expanding U.S. healthcare expenditure, which currently exceeds $4 trillion annually.
What differentiates IKS Health from a crowded field of BPO providers? It is their depth of clinical knowledge. IKS supports over 40 medical specialties, ranging from orthopedics to cardiology. This specialization makes them indispensable compared to generalist service providers. They have integrated artificial intelligence and machine learning into their workflows to automate repetitive tasks, which not only lowers operational costs, but also improves the speed of delivery. Their competitive edge is further sharpened by their physician-led approach, meaning their solutions are designed by clinicians for clinicians. This unique perspective has allowed them to capture a significant market share within the U.S. ambulatory care sector, a niche that is less saturated than hospital-based services, but equally lucrative for Indian service exporters.
In the context of the Indian stock market, IKS Health is viewed as a high-quality mid-cap play within the healthcare IT vertical. While market sentiment can fluctuate based on global economic conditions, IKS has historically been favored by institutional investors due to its clear earnings visibility. The stock's performance is often benchmarked against other healthcare outsourcing peers, yet it frequently commands a premium valuation because of its specialized clinical focus. Investors look closely at the Net Promoter Score and client renewal rates, which for IKS remain at industry-leading levels. For those tracking the NSE and BSE, observing the quarterly growth in headcount and new contract wins is essential, as these are leading indicators for the company's future stock price appreciation and dividend potential.
One of the most significant milestones in IKS Health's recent history is the acquisition of Equity Holdings. This move was a game changer, effectively doubling the company's size and dramatically expanding its technological capabilities. Equity brought with it a massive footprint in medical transcription and coding, as well as a large client base of over 2,500 health systems. This strategic merger allows IKS to offer a truly end-to-end solution, from the moment a patient schedules an appointment to the final payment of the bill. For investors, this acquisition signifies a bold move toward market consolidation and highlights the management's ability to execute complex, large-scale integrations.
This expansion is expected to drive significant synergies, improving margins over the long term through economies of scale.
No investment is without risk, and for IKS Health, the primary challenges are external. As a company that derives almost all its revenue in US dollars, but incurs costs in Indian rupees, currency fluctuation is a constant factor. While they employ sophisticated hedging strategies, extreme volatility can impact the bottom line. Additionally, the regulatory environment in the US, specifically regarding data privacy and the HIPAA Act, is incredibly stringent. Any lapse in compliance could result in significant penalties and reputational damage. Furthermore, the rapid advancement of AI presents both an opportunity and a threat. IKS must continue to innovate to ensure their human-in-the-loop services are not entirely disrupted by pure software solutions. Understanding these risks is crucial for any professional seeking to optimize their portfolio with IKS shares.
In conclusion, Inventurus Knowledge Solutions represents a sophisticated evolution of the Indian IT services story. It has moved beyond simple cost arbitrage into a high-value, clinically integrated partnership model. Looking ahead, the company is well-positioned to capitalize on the value-based care trend in the US, where providers are paid for outcomes rather than volume. With a strong balance sheet, a massive global workforce, and a proven track record of strategic acquisitions, IKS Health is poised for sustained growth. For entrepreneurs and investors, IKS serves as a prime example of how to scale a niche service into a global market leader. As the US healthcare market continues to seek efficiency, IKS Health's role will only become more vital, making it a key stock to watch